Hi everyone, so welcome to Single Value. So today I want to talk about Beyond Meat and a stock that's actually better than Beyond Meat. So currently we have the value is $130 or 131 since the ticker symbol was moving quite a bit right now, giving a valuation of about $8 billion. Recently they released their third quarter result and it was not good. The share price jumped off a cliff from 156 to a low of about 125, but as you can see here, it has jumped back up on people just seeing that the stock is a bit cheap in terms of pricing, but I think that's just people anchoring that pricing in their mind rather than looking at the financial metrics. So if we look at the net revenues, it was $94.4 million, an increase of 2.7%. Which isn't much. For a growth company, that's not much, is it? Particularly when they make a loss of 19.3 million. It doesn't seem like the logic doesn't make sense if you see that it's only gone 2.7% growth. But we can break that down and we can actually see what's happened. If we look at the US base for the business, the retail sector actually grew 40%, which was pretty impressive, from 44 million to 62 million, whereas it's the food service area that went from 18 to 16, where, that kind of made a lot of sense that food services have been impacted quite a bit, whereas a lot of people are doing their shopping in supermarkets, hence a big rise in retail. And for international, it's a very similar situation. Retail went from 6.2 million to 7.9, whereas food service took a massive dive from 23 million to 8 million. So you can quickly see the food service area did take a massive hit, and it's actually the retail that has really lifted the result. And if food service did not take a hit, we would actually see quite a decent amount of growth in this company, though it would have still been much lower than prior years. So the growth has kind of dropped off. The same thing with their margins. Their margins have also kind of dropped off as well, though their margins are still pretty high in the scheme of things. And I kind of see some alternative meats coming in and starting to compete with them. So I kind of expect margins to be squeezed. I don't see the food service area coming back too quickly yet. Retail will probably likely continue to increase, so there is still some value in this company going forward, of course. The question is it worth 8 billion? I don't feel like it's worth 8 billion. I feel like maybe 4 to 5 might be more realistic, but of course, if the market's willing to pay 8 billion as a valuation for this company, then so be it. But I'm looking at another company and I think it's much better than Beyond Meat. Beyond Meat had an advantage, and it doesn't really have that much competitive advantage. It's, in a way, it's a meat, right? If you sell a meat, you're just competing against other meats, and it doesn't really come into that much of a product-based thing where people go, I have to buy Beyond Meat. People might buy a cheaper alternative if a cheaper alternative that's very similar in texture and taste comes along. So the stock that I think that is much better is a company called Tattooed Chef that recently came onto the market through a reverse merger through a SPAC. So the current valuation is $1.14 billion, and share price is $17.3. As we can kind of see, like recently the share price has kind of dropped off a cliff, though it's still fairly new to the market. So again, I think Beyond Meat's drop did affect this company quite a bit. But if we look at their third quarter result was pretty good. So if the first 9 months revenue was $108 million, that was an increase of 87% compared to the prior year of $58 million. That this company is a profitable company. It made a net profit of $39 million compared to $34 for a year prior. But if we consider their third quarter result. Third quarter was 41 million. So if we look at the comparing quarters, net revenue was 94 for Beyond Meat, while it's 41 for Tattooed Chef, and they are growing at about 65% for the third quarter, and though they are also retail based as well. So if we consider that they're retail based, they did have an advantage, as we can kind of see with Beyond Meat's result. Retail was very strong, but even then it was only a 40% growth. So Tattooed Chef has an immediate amount of growth that is much higher than Beyond Meat right now. And also, if we look at their products are actually branded products that actually look unique rather than being something that's more generic. As much as Beyond Meat had a first advantage, like by getting to the market and trying to sell into food services, I think that's slowly weakening over time. Whereas I look at Tattooed Chef, and they've got really nice branding. They're selling, unique products like buffalo cauliflower pizza, cauliflower mac and cheese, and for me that's a really unique selling point, as opposed to just selling a general commodity that Beyond Meat does. Again, I think Beyond Meat will still continue to succeed for at least a temporary while, until at least some alternatives come onto the market. But I think Tattooed Chef is really showing, they're doing, their products are very unique. They're doing very well in the market. Their sales are increasing accordingly. 41 million for the third quarter, and I think it will continue to increase, given that they're expanding into many different retail stores. So they're only recently getting into Walmarts, Targets, and all that, and there will be much more expansion by the company, so I can kind of see them growing a lot more. So if we consider the third quarter result, their revenue for Beyond Meat was 94 million, and for Tattooed Chef was 41. So if we consider how many times that revenue is above Tattooed Chef, 94 over the 1, it's only about 2.3 times higher, whereas the Tattooed Chef market value is 1.149, whereas their valuation is 8 billion. So we're looking at a share price that's almost 8 times higher. So revenue is only 2.3 times higher, whereas the market value is close to 8 times higher. So you can kind of see the massive value difference. And also Tattooed Chef, has a stronger selling proposition in my view, particularly with the branding. You might argue that, of course, Beyond Meat, everyone might eat their product, whereas not everyone might want to eat this type of product. And that might be a fair comparison. But if I just look at the standard metrics in terms of growth, financials, market valuation, Tattooed Chef wins by far, by a very big margin. If we look at their products, they are very unique as well, and they are selling really well, if we can witness by this growth rate. And I'm thinking, why wouldn't you want to choose Tattooed Chef as a stock over Beyond Meat? Because Beyond Meat, there's a lot of things that are being eroded. As much as there's a really nice growth rate around retail, it's only a matter of time before people start competing, because they are getting some extremely good margins, particularly in food, whereas Tattooed Chef, people will compete with them, but they're showing that they can hold their own. And something like this is just really strong branding that people will look at, and it kind of has a brand loyalty, whereas with Beyond Meat, it doesn't seem to have that same branding that would make a consumer look for their product in particular. But of course, That's just my view. Your views might be different as well. Certainly let me know if you have a different view or if you agree. If you like any questions, post below. Until then, good luck investing, everyone.